and all, hope you're doing well. We had a very bonkers day yesterday, so hopefully you are okay. You need to know when to trade and when not to trade. If you saw my trade of the day recommendation was to not take the trade of the day, but simply monitor because of the CPI. Those who took the trade of the day did very well. It was pound USD, and it rallied quite hard and quite strong. And so those who did take it would have done well, but you have to know the risk events and how to protect your account. And these risk events can be quite catastrophic unless you're careful. So you need to trade small and you need to respect your risk to account, and also have an awareness of the calendar as well. We've got UK inflation data in 4 minutes, so you've got to be careful with the pound, and we're in double-digit inflation. If it's worse than feared, then the pound's probably going to drop. The COP data was also quite negative for pound as well. Okay, so lots of things to take into account, and you note that the dollar bubble is over here now. Okay, and I think they're going to be trapped. They're not going to get out of that position. They're going to think it's going to be good to hold, but they don't realize that the form and the herd majority, so they're short in the dollar. I've got a feeling they're going to hold on to that bias, I think. So we've got a strong USD, however the risk out flipped to risk on, so there's like a mismatch there. This is acting like a safe haven, whereas the big picture is risk on. So we have to be careful with the risk calculation. When we go from off to on, usually the 24 hours, 48 hours after that event, it can be very choppy and very volatile because there's still the shakeout is required. So don't think it's going to be easy just because we've gone risk on. I think we're going to see a lot of fluctuations still. And now the dollar being over here, it's going to be like a wrecking ball. So we're going to have to wait and see what happens tomorrow on the risk calculation tomorrow. But this is the difference from last week using the average over the week. Okay, VIX is above the yearly pivot, so that's very interesting. So keep an eye on your VIX and put an alarm on TradingView for 26.5. I say it pretty much nearly every day, but it's a very key level. We're above that, then the fear is in. And we can see the fear in the flight to safety in the yields. And they really did spike. They bumped up a great deal. And now if you look at the 12 month, we're really rocketing on the 12 month. So there's fear and worry short term within a year, and there's going to be lots of volatility and problems in the near term, much more so than the long term, and that's risk off. Okay, so the shifting over the week is fairly green on the indices, not too green, but the oil is quite a strong green. However, the White House have tried to intervene on the oil price, and just to add to the chaos yesterday, they put out a statement about oil and how they were going to buy at $80 a barrel. So I think they want oil price to come down to ease the inflation fears. And that put like a bit of a panic in the market as well, because, having like White House intervention on price in the stock market on a particular commodity, then they might say something or something else. So unusual for them to do that, but I think they're worried about inflation, so they're trying to get that down to 80, and we're $86 a barrel now, so it's only a $6 drop. But yeah, there's a lot of craziness yesterday, so we have to be careful. So the euro and the pound and the Aussie and the Kiwi, we try to regain some losses. We are still just about positive. But however, the big picture, if you look at the year, 6 month, 3 month, they are decidedly negative. It's going to be a bit of a gamble because we know where the dollar bubble is, and we know that we should be buying the dollar because of the sentiment. And the fundamentals will be true if we go risk off. So it's really important that you know the connection between the dollar and risk. So if we go risk off, the dollar is going to perform well. And we've got the dollar being strong sentimentally, that's going to be a tick in the box. If we go risk off, it's going to be a tick in the box, okay? And see pound yen's fallen as well. So we should, in theory, traditionally speaking, see a stronger yen as well. So I'm going to be watching UJ, the dollar yen today, and see how that goes. Because that was absolutely on a crazy tear. So we're going to see a battle of the safe havens. I think it will develop this week, next week. Dollar yen's going to be very interesting. Dollar Swiss is lagging. Aussie USD is leading. Yes, that's right. I forgot what it was then, but I remembered it now. Yeah, it's to do with the USD, but I won't tell you anymore. Those who subscribe in Discord to the Patreon, to the Quasidb service will know what the trade of the day is, but it has a USD component in the trade. So if you want to subscribe to that trade of the day, just click the join on the Bulletin tier, and for 33p a day, less than 50 pence a day, and you get your trade of the day and Bulletin as well. So you get this video and you get this document as well, which you can read at your convenience. So it's quite affordable, and the trade of the day tends to be quite good. If I don't think it's going to be a good trade, I will put a caveat on there like I did for the pound USD because of the CPI data. However, that being said, it did do well, and then the CPI came out, and then of course it fell. So we have to be very careful and know where your exit is, and trade safely as well, and be sensible with your stops. So this is how the S&P, this is the big fall that we had, and we're now below the 21 moving average, which kind of acts like quite a good support, and then it acts as quite a good resistance, and then we're below that resistance. So it's quite a good idea just to have like a moving average on there, just so you can detect a trend on a daily chart. It's quite useful. You can't really see that so well, but you can see Kiwi USD is red and pound USD is red. Euro USD is now gone back to red. France 40 is flipped to sell. US 30 is to sell as well. And there's them guys going long, which is a bit crazy. They saw this big drop. They might have been looking left at these wicks and think, well, okay, so I'm going to try and buy. And they try to buy, and of course it really didn't work out for them at all. They probably thought this was just like an irrational dump, and so they just decided to buy. So they did, and of course they don't realise what happens when they form a herd. Price goes to punish them. So Hexagon warrants some attention. If they sell it, this would be a bottom, okay? But if they buy it, will continue to fall. Hopefully you understand the logic. And now the thing is with the US 30 is that it's a sell at the high level. So if they do sell it, it's going to be a risky buy, right? And I'll put a little note on Discord about how that works. So I don't want to repeat myself, but essentially at the in the summary is that it's a sell at the high level because they're above 50%, and so we want to be doing the opposite of the majority. So they're long, right? So we don't really particularly want to be buying it if they're long. If they reduce longs, that's going to be a risky buy. So hopefully that makes sense. German 30, this won't be a risky buy because it is a buy at the high level. It's below 50%, 46%. So if they add to their shorts, it's just going to confirm the big picture, and then this would be a bottom. We've got the London Open, which is going to be very, very bumpy today. So you have to be very careful. Gold sentiment, now it should be falling, like I said, and we went up, which is a little bit naughty, but I think we wanted the stop loss cluster, 1735. We didn't quite get it, did we? But we came close, dumped, and we should be continuing to fall. But do note what I put on Discord about the support just below the stop loss cluster. The stop loss cluster is at 1687, but we've got technical support at 1675. That breaks, it'll be a rip basically for gold. And we got the Fed next week with their 1% increase on their interest rate. It's a 100 basis point increase, so that's going to really hurt gold, I think, where it should, fundamentally. And especially if the retail guys are going to be adding long, then it's not going to work out well for them. Technically, we've got really good support, 1675. Hell of a lot of movement, dollar CAD. I don't think you could swing trade this. We had a little conversation earlier in the private chat about swing trades, and I don't think you could do it with the dollar pairs right now, unless you're at a humongously wide stop. But then you've got the danger of being taken out with a wide stop. So it's not, for me, an ideal way to tackle the market. I prefer to do it intraday, and then that way, at least you know your exit. If you're swing trading, where the hell do you have your exit on the dollar CAD? It's moved 27% in one day, and it's just crazy. I don't know how you do it. Perhaps you just have a micro lot have a really wide stop, and then then you'd use fundamentals, maybe. Know that the CAD is probably going to weaken, maybe because of oil and that White House statement, so it could be a good long. We look at the bubble, the dollar bubble is strong, so but then that's subject to change. By Friday, the dollar bubble is going to be moved. It will move away from the axis, I think. And then Monday, we'll have a whole new setup for the USD. So yeah, little things to think about, how to approach it. Also, you want to be looking at the time frames as well. As you see on Twitter, someone says you're using the wrong time frame. That's like irrelevant because it's personal. It all depends on your personal approach and how your mind works as well. You might be better on a 1 minute, 5 minute chart than opposed to like a day. Maybe you don't get enough information on the moves on the day. But so if anyone tells you that you're doing it wrong, there isn't a right way or a wrong way to do it. It's just what works for you. And depending on how quick your mind works as well, you might not like the daily chart, even though it provides you enormous information. Perhaps your brain just wants more activity, and so everyone's wired differently. So lots of things to take into account. But I don't know how you'd swing trade it unless you're the really wide stop. But maybe it could be a long because they have really shorted it. So yeah, bit of one that I need to think about the approach, because I want to try and incorporate like a system, but everyone's different. That's the trouble. So I think we'll keep to how we were doing it with the bubbles. Are going to supplement your approach. As long as you've got a system that works, then the bubbles can complement that. I think that's the best way to do it. Try and incorporate like an all-in solution, but I don't think you can do when everyone's so different. So this is quite poor. This is below 50%. This is worse than the roulette table. Swiss is paying the retail guys and the euro and the Kiwi until they change. Then I probably wouldn't enter right now. I'd want that about 70%, and then I could enter with like confidence that the trap's been placed. They're currently placing the trap, and it's probably to do with the London Open, and they're just inducing positions, and then they're going to trap them, and then they're going to punish them basically and take their stops. And pound USD, what long was I traded the day? It did very well. It didn't stop there. It continued higher, and of course the CPI came out, and then it really did fall. It fell massively, but risk also puked as well. The whole risk complex it fell. I think Nasdaq was down 5%, 4% yesterday, which is bonkers. So good if you called it, but not a swing trade scenario. These trade the days, hence the day element. We've gone back to extremes, so that's worth noting, which is a bit annoying because we had moved away. We went to neutral on the Euro USD, and it really quickly flipped back to strong sell. So we're going to be stuck here again, and this confirms the USD bubble, where the USD bubble is. The inflation rate has been come out, and we've got the PPI later today. So, oh, that is interesting. Right, that's actually quite good. Right, that is interesting. So I'm going to be looking at the pound setups now. So I'm going to wrap up now. That's actually quite a nice surprise. I'm quite happy about that. I didn't want that to get any worse because things are bad in the UK as they are. That's a good sign. Cool. All right, so keep calm, always trade safely. Sorry for waffling a little bit in the video, but I tried to incorporate how we're going to work, like get an all-in-one solution, but I don't think we can. I think we just use the bubbles to complement your system. And if you need help in developing a system, then I can help. But it's ideally that you have something in place and the bubbles can complement that. So trade safely, you guys. We've got a very bonkers day yesterday. Could have a similar day today. Alternatively, the big fish might be looking to buy to try and get a bargain. There is always that. We have to think, things fell so heavily yesterday. There's going to be a lot of fear. And when there's lots of fear, there's opportunity. So we have to be very careful. And the trade of the day will depend on a risk off day. So just keep an eye on your risk assets. Trade safely, and I'll speak to you soon.